Hey everyone, thanks for jumping back in. This is the weekly chart wrap by True Options Masters. I'm your managing editor, Mike Merson, and you are here to check out the coolest charts that I spotted throughout the week. So let's just jump right in. We have some pretty standard, I'll say, charts to look at this week. I haven't really been checking out the individual equities so much lately just because the bigger macro picture is so interesting. So I want to start on SPY. Now, if you've been watching these videos, I've been screaming about this long-term blue trend line all the way back from the pandemic bounce in 2020, March 2020. And the S&P has bounced off this trend line time and time again before we fell through in September, reclaimed, faked out, broke back down, and now we're hanging out trying desperately to break through it again. So what does this mean? Well, I had a feeling that the SPY was not, this is the S&P 500, by the way. I'm sure most of you already know that. I had a feeling that the SPY was not going to break through this trend line this week, and in this week's action, that is kind of what we're seeing, at least so far. I'm recording this 11:16 a.m. on Friday, so the trading day is not yet over. The S&P might, put on a really big rally here. I mean, what would it need to break back above this trend line? What's that? Get all this stuff out of the way. Not even, just over 0.5%. Definitely possible. I would like to see it, because it would, if we could break out above this again and hold it, that would look really bullish for stocks going into the end of the year. But we do have some issues. For one, bearish divergence on the RSI. We have a lower high while stocks are basically at all-time highs, just a little shy of all-time highs. We have a bearish cross down here on the MACD on the daily. So that could spell some trouble. You can see that these red MACD bars are starting to form, and if they pick up in volume, that could not be very good for stocks. So I'm not terribly concerned right now. I think if we're going to see some volatility, it's not going to be the kind of downside we saw, like if you remember December 2018 is the analog I'm trying to draw here. That we saw some serious volatility, which is uncharacteristic for this time of year. I'll just clean up that divergence. But still, this is a trend line to watch. If you're trading SPY, you definitely want to long a breakout above this blue line. With the acceptance that we might come back to retest it, but that would be a very bullish breakout and we would get back on trend, which we've really been trying to do for a few months here. So let's move right along to essentially, well, I don't want to say the opposite of the S&P 500, but a lot of gold bugs will certainly think of it this way. Let's check out gold. Gold, I was looking at the weekly chart when I sent this to you on Tuesday at first. So gold bugs are really going for it here. We have major downtrend broken, this blue one from the top back when gold was trading north of $2,000 an ounce. And then this slightly shorter term white trend line also broken. And we're coming back in to retest it this week. So yeah, this is the weekly chart, closes in 5 hours. Let's see if gold bugs can do something here. It does look like we're trying to come back in from that breakout. This could be yet another fake out to break all the gold bugs' hearts. But I do think it's notable that after the CPI print, and I pointed this out in either last week's video or the one before, that Bitcoin obviously now gave up all those gains and then some, and then even more. Meanwhile, gold has held on to its gains. If you're a trader, if you want like big exponential gains over time, you're obviously not holding gold. This is a store of value type of asset. It's just been narratively broken for the past year with inflation at 6.2% year over year. In November. Gold's been kind of a disappointment, and silver the same for that matter. So if you own gold, it's not one to worry about. I think gold will trend higher over time. I think we'll see gold over $2,000 again, probably sooner than most of us think, especially if stocks sell off into the end of the year. There's a chance gold could catch another bid. Generally, gold will do well when the market's not and when volatility is high. It hasn't really been doing that lately. Gold fell off a cliff during the pandemic. Big time. Let's see if I can find that real quick. Yeah, so here was gold in March, right when stocks fell off. Gold fell from 1668 all the way down to 1456. So it certainly wasn't protective in that moment of panic. But gold, gold will survive longer than you or me or our children probably as a financial asset. So I have a small amount of gold, not physical. I actually have digital gold by way of Pax G. That's earning me yield, which I've always thought about that. Like Warren Buffett's famous argument for not holding gold is it's just a rock. It just sits there. It doesn't earn you anything. Well, now it's not a rock. Now it's code, and now it actually earns you yield. So someone tell that to Warren Buffett, and he'll probably just give up and go take a nap. But anyway, let's move right along. Speaking of Bitcoin, I wanted to take a look at the total crypto market cap. So crypto having a pretty rough week, right? I was looking at the Bollinger Bandwidth for Bitcoin last week, I think, and I perhaps foolishly looked at the very short width and impending volatility in Bitcoin that was likely to come as a sign of positive volatility. That turned out to be wrong. Turned out it was negative volatility, as the entire crypto market, this includes Bitcoin and Ethereum and all the other altcoins, fell as much this week as over 17%. Now, right now, we're hanging out more at like 11%, which is good. It's catching a bit of a bid today. And I apologize, it's raining outside my window here in South Florida. I hope that the mic isn't picking that up too badly. But what I see this as is not just it's not like the top of the bull market. I really don't think it is. Crypto bull markets don't end this way. They end with an insane blow off top where everyone and your dog wants to buy Bitcoin. And the price just goes straight up vertical. It's what we saw let's go back to 2017. Look kind of tame now, but this week, Bitcoin went from 500, I'm looking at the market cap. I remember Bitcoin went from probably 4,000 to 10,000 to 15,000 to 20,000 in a matter of weeks. It was crazy. It was all anyone was talking about. And then, of course, we know what happened next. But that was then, and this is now. This, my friends, is a breakout and a retest of the previous all-time high. This is very typical crypto action. The sell-off got a little pronounced. But you can see we got caught by these 2 wicks here. And this yellow horizontal represents the weekly, what I consider to be the main weekly resistance support for the crypto market. And today we're bidding off it really, really nicely. I mean, Bitcoin's almost at 58K again. Ether's up over 4,200. So I really don't think this is a place to be worrying about crypto. I really don't. It can be tempting. It's very, very volatile, and it causes a lot of worry in folks. But right now, like I said, I think if Bitcoin closes below, put this back in log. If Bitcoin closes below, this is the Bitcoin dominance, excuse me. So similarly to SPY, right? I have a long-term blue trend line for Bitcoin. If we closed below 45K in the next couple weeks, that's bull market ending. That's terrible. And we definitely don't want to see that. But we can really come all the way back down here to 45, 40, 44K even, 46. As long as we bounce off this line, I think it's a great thing. Because it means we haven't seen the parabolic top yet, which we tend to see at the end of crypto bull markets. And it would mean that the cycle would lengthen, which it already has. The cycle's already lengthened from previous cycles, judged by both the halvening, which is when Bitcoin supply goes in half, and judged by the bottom of the previous bear market. So the longer this goes on, the higher Bitcoin's going to go, I think. So if you're holding Bitcoin, I wouldn't panic about it yet. If you have some cash lying around, maybe plug a little bit more into the space. I can hardly do you wrong. I know I did this week, so take that for what it's worth. Let's take a look at the VIX. VIX is acting a little funky. Let me just clean up my indicators here. We're not going to need this or this. What we're going to need is the Bollinger Bands and the Bollinger Band width. So, what happened to my horizontal? That's okay. Let's put a new one down. Let's bring this to the daily. So, yeah, barring this huge surge in volatility, I try to keep that off my screen. So you can see that when the Bollinger Bands on the volatility index reach about this 0.15, 0.14 handle, I'll just go ahead and make this yellow as is tradition. Volatility tends to expand rapidly. So you can see we tapped it down here on August 28th. Big pop in volatility. Tapped it here on October 16th. This is in 2020. Big pop in volatility. And we just keep getting these pops when volatility gets low. Here's another one we can take a look at here. That's definitely a big pop in volatility. And so what do we have now but the Bollinger Bandwidth getting pretty low once again. Not 0.15 low, but we did get a nice surge of volatility when it was this low again. So what's going to happen, right? Volatility is a little bit up today. Definitely nothing to be concerned about, but there's things about lockdowns in Austria, mandatory vaccines. People are a little on edge going into the Thanksgiving holiday. I think we might see a little downside action. Like I said in SPY, I think we might see a little downside in the broad market. Because remember, volatility is the expectation of future volatility in the stock market. So with the VIX popping higher, if it comes out of these Bollinger Bands, this is a signal I learned from Jeff Clark. Jeff, if you're watching, thanks for that. If volatility pops out of these Bollinger Bands and comes back in, that is generally a sell signal for the VIX, which is a buy signal for stocks, right? So you can kind of see that dynamic in play. VIX pops out of its Bollinger Band, comes back in, then volatility really comes in. And that's when stocks tend to rally a lot. So if we see that again, that would be a signal to get long stocks. Like I've been preaching this week in True Options Masters, you kind of want to be a little cautious here, I think. If you have big winners, especially in tech, which we're going to get to that chart in a second, take some chips off the table. You'll be glad you did. Markets are at all-time highs, basically. No one ever went broke taking a profit. Now, if only I could take my own advice. Let's move right on to QQQ. This is the most recent chart we were looking at. And I'll just go ahead and take the Bollinger Bands off and put our RSI back on. And the MACD. Oh, that's the wrong. Here we go. RSI and the MACD. One of these days I'm going to upgrade my my TradingView account. Just you wait. I'm just waiting for Black Friday. Got a sick deal for Black Friday. Okay. So, QQQ. Been in a beautiful, beautiful channel for the past couple of years now. All the way, or rather a year and a half, going all the way back to October. We've just been chopping up and down in this channel. Beautiful uptrend channel. Tried to break out of it, met this resistance, came back in, met this resistance again, came back in, finally broke through it, and then actually retested this resistance as support a little bit later on. So we got caught by both the blue line and the white line. This is just a technical marvel. This is acting exactly as it should. So what does that mean for today? Let's go ahead and zoom in here. This is what I was looking at this morning. We have a pretty clear, if you ask me, divergence in the RSI and the price action in QQQ. So what does that mean? When your price action is making higher highs and your RSI is making lower highs, that's a fairly bearish indicator. And it would make sense because we're coming right up again at the top of this channel. So like I've been saying, you want to be a little cautious here. The MACD has not performed a bearish cross yet. It's been saved by the price action today, but it is perilously close. So just like I'm saying with SPY, just like I'm saying with tech stocks and volatility, you want to take just a little bit of profit off the table here if you haven't already. It's a good price to do so. Apple just hit all-time highs. There's lots of stocks that have paid out very, very well that would suffer in volatility that you want to take profits on, especially if you're in some of these semiconductor companies and things like that. And I know that's kind of against what I'm saying about crypto. You know, crypto and stocks aren't extremely correlated, but they certainly can be. When tech stocks are doing well, crypto tends to do well. But it can certainly diverge. So you want to be on the lookout for that too. And with that, I think that's going to wrap up this week's chart wrap. Thank you so much for watching. I forgot to mention in the beginning, but, you know, please give us a like, subscribe to the channel, leave a comment down below if you have any thoughts on these crazy videos I'm making. Hit the notification bell if you want. I never hit those. But, you know, they're neat. They're neat. They help the channel out. So if you want to help the channel out, go ahead and hit the notification bell. And I will see you next week for the next chart wrap. Thanks for watching, everyone. Have an awesome weekend and an awesome Thanksgiving weekend. I'm gonna crack myself. Probably won't have one of these for the Thanksgiving weekend because I'm gonna be visiting my mom, which is not here at my home desk setup. So I guess I'll see you the week after Thanksgiving weekend. Enjoy your turkey and your Black Friday shopping, and stay safe out there.